Welcome to the CP Study Circle meet on the topic of critical aspects of presumptive taxation scheme under section 44 AD, ADA and AE. I know we are at the time of, we are very much nearing to the due dates. So I think this will be a very interesting topic. Of course, to talk on this, we have today a well-known, renowned person, Mr. Prashant K L. I request our chairman to escort the speaker to the dais. And also request the chairman to hand him a floral bouquet. Thank you, sir. I welcome you again. I request our chairman to give a welcome address.
Professional colleague K L Prashant sir, today's speaker, Pramod Hegde and managing committee members, and my professional colleagues, ladies and gentlemen, welcome you all for the today's program on critical aspects of presumptive taxation scheme 44 ADAE and ADA. This being the second session in South, I think we are getting a good response physically and virtually. Thank you all for that, for supporting. We seek your continued support to conduct. If you physically present and support us, we can plan to have another session in a week so that continuously we can have a program. You can save your time to come to branch so that we can regularly have programs here. Coming to this topic, it's a very interesting topic, critical aspects of analysis of presumptive taxation scheme. From the beginning of income tax, this scheme is there, but yet we are failed to make critical analysis and make use of these sections. Going forward, even once the GST stabilizes, entire income tax may fall into the presumptive taxation. That's what feeling is coming from everywhere. It may happen in future, but it's very interesting to discuss that we have with as K L Prashant sir for this topic. I once again welcome you, and I want to give a brief key programs upcoming. Tomorrow we have a program on new banking. It's a new banking system. On that we have a program on Chancery Hotel. Request members to register. On 11th, ICA Delhi has come up with a proposed new scheme of guidelines for education and training. It has been approved by the Central Council and it's also got gazetted. Now it's open for public discussion. We want to have, because it impacts each one of us in the practice and students, those are doing articles. It's very important discussion. We're planning to have on 11th in Chancery Pavilion, Richmond Circle Hotel, 11 o'clock to 1 o'clock. We have a discussion on that. Senior members like our Central Council member, Kota Srinivas, Madhukar Hiragange, Madhav Murthy, all faculties are attending. Please, I'll circulate that PPTs as well as that invitation to you all. Please go through and make a critical and constructive, give a constructive feedback on that day so that we can escalate to the HO what best possible we can implement. On 17th and 18th, we have a 2 days conference on Companies Act, because now we are all going to start Companies Act. Detailed discussion on cargo, loans, related party, all aspects will be covered on those 2 days conference. Senior members. 27th, we have MSME Day jointly with Pina Industrial Association. For that, our large and small and large industry minister Murugesh Nirani sir is agreed to come as a chief guest. I request members to register and join for that program. With this, I welcome you all once again. Over to Enzo.
Thank you, Chairman. I take the privilege of introducing CA Prashant K L, who is a chartered accountant with more than 2 decades of experience, who is a Bachelor of Commerce from Bangalore University, who has completed his diploma in Information System Audit, certified under International Taxation course conducted by ICI. He is a partner at Guru and Jana, a 400 people firm, and he heads the partners. He is heading the taxation division, both direct and indirect, especially international taxation. His professional excellence experience includes finance and taxation at UB Group of Companies, and he was heading a central monitoring team at Arvind Group of Companies. His co-authored book on international taxation, published by CA, co-authored book on GST, Where Did My Profits Go? An illustrative narrative of GST law. He is also a speaker in various forums like ICAI, DTRI, and Indian Tax Department, and various other professional forums. He has presented papers in Dubai, Delhi, ICAI chambers in Bangalore, presented papers in regional conferences as well. With this brief introduction, I here present to you Mr. K L Prashant. Over to you. The dice is over to you, sir.
Firstly, congratulations to Bangalore branch ICI. They have made the study circles more nearer to us. So people in Bangalore South need not complain that we have to travel too much now. Thank you for that. Thanks a lot. So we will come to today's topic straight away. So when it comes to the presumptive taxation as such, so it was not there all along, right from the beginning. It was brought in somewhere in 1994, I think, if I remember. So the idea of presumptive taxation was to ensure there is ease in doing business. So there is more simplification of taxes because there is a requirement of maintaining books, getting the books audited, doing a very deep income tax computation. So the method in which the tax returns has to be filed is quite detailed. So in order to ensure it is simplified to the businessman, presumptive taxation was brought into the statute books. Now then, once we go through the law, we would actually see that it is actually not that simple because the way it is drafted and it goes on to interconnect various other provisions of the law. We will go through that slide by slide and we will understand that actually it is not that simpler as such. So what I have attempted today is to bring certain examples and illustrations. So we will go through each of those and see how best we can interpret them. I can only say, as in any opinions that we give, it is best to the knowledge that I have on the subject. So something contrary can or may be taken by the assessing officer as such. So with that disclaimer, we will start the session as such. So the provisions of 44 AD begins like this, and it says, notwithstanding anything to the contrary contained in sections 28 to 43C. So straight away it starts with a non-obstante clause, and it overrides all the provisions that we use for the business income computation as such, right? So the provisions of the sections are applicable only when the following basic criteria are fulfilled. So we will just basically on the, just as a introduction, we will see when it is applicable. So it is applicable to eligible assessees, not to all assessees. Assessee has to be eligible. Assessee claiming benefit under section 44 AD should be eligible. He must not have claimed specified deductions, which are specified deductions and exemptions under section 10A, 10AA, 10B, 10BA, and also deductions under chapter 6A, part C of the chapter 6A to be specific, where we have various deductions from 80HH to 80RRB. Then it is not just the eligible assessee that we are supposed to see. It is also important to understand eligible business should be carried on by the eligible assessee. Otherwise, 44 AD is not applicable to. And eligible assessee business is assessee involved in non-eligible business cannot claim the benefits under 44 AD. So we need to understand. So quite simpler, right? Non-eligible, it is easy to define. So the law has defined eligible business other way around, and it has told first you understand what is non-eligible businesses. Rest may all come under eligible business as such. So first on eligible assessee, it should be a resident individual or resident HUF or a resident partnership firm. And this excludes LLP. So for an LLP, 44AD is not applicable. Non-eligible businesses. Now this is easier. It says person carrying on business or profession under section 44A, subsection 1 is missed out in this presentation. Just read it as subsection 1 also. It says every person carrying on legal, medical, engineering or architectural profession or the profession of accountancy or technical consultancy or interior decorations. So these businesses are listed in section 44AA subsection 1. And why subsection 1 is relevant, we will come to know a little bit later, because there is subsection 2 also, where the board has been authorized to list few services and they can prescribe what are the other specified professions as such. Point number 2, earning income by way of commission of brokerage. Assessee earning income by way of commission of brokerage. Now, this part is very critical. It is not that the income is the criteria here, it is the person. For example, if a person is having any of these incomes, then he is out of 44AD straight away. That is how we should read the provision. Earning from agency business, earning from business of plying, hiring or leasing goods carriages, because these are separately covered under section 44AE as such. So these are non-eligible businesses. Of course, the most important criteria is also the turnover criteria, which says that if the turnover is greater than 2 crores, then section 44AD would not be applicable to such businesses. Okay. So under section 44AD, these are certain key points that we also should note. It says deductions under sections 30 to 38 are deemed to have been allowed. The section 44AD reads, deductions under section 30 to 38 are deemed to have been allowed. Any deduction allowable under provisions of 30 to 38 are deemed to be allowed. Then important provision when it comes to advance tax. For the assessee who is opting section 44AD, the first 3 quarters of advance tax of 15 June, 15 September, 15 December need not be followed. Assessee under 44AD, it is sufficient if he can pay the advance tax on the last quarter, that is on 15th of March quarter. This is as per section 211. Maintenance of books of accounts. Assessee is exempted from maintaining books under section 44A and tax audit under section 44AB if he is covered under section 44AA provisions as such, where he would be declaring income at 6% or 8%. We will understand when 6%, when 8%. Non-eligibility to opt 44AD. If after declaring profits on presumptive basis under section 44AD, this becomes very important provision for us to understand. If after declaring profits on presumptive basis under section 44AD means to say, in any of the years, at least in 1 year, an assessee should have declared his profits under section 44AD. So, say for assessment year 22-23, non-declaration of profits on presumptive basis for any of the 5 successive assessment years thereafter. That is from, you leave 22-23, we go with 23, 24, 25, 26, 27. Would disentitle the assessee from claiming profits on presumptive basis for successive assessment years subsequent to assessment year relevant to previous year of such non-declaration. So the assessee is not opting for 44AD in this example in assessment year 22-23. As a result of that, he would not be able to opt section 44AB from assessment year 23-24 to assessment year 27-28 onwards. Of course, there would be certain interplay of sections as we go ahead. We'll go stepwise. So kindly take note. It says if after declaring profits on presumptive basis. So this point should be in our mind. So this example is quite clear. So I would not read the example again. I think we have taken note of the provision as such. We'll go to the next slide. Then comes the interplay between 44AA, 44AB and 44AD as such. 44AA subsection 2 clause 4. It says where the provisions of subsection 4 of section 44AD are applicable. Now this becomes interesting. 44AA subsection 2 clause 4 then needs a trigger. When is the trigger? Only when subsection 4 is opted by the assessee. And what is subsection 4? We saw here in one of the assessment years, the assessee does not opt for section 44 AD as such, right? So that is when 44 AA subsection 2 clause 4 triggers. So where the provisions of subsection 444 AD are applicable in his case and his income exceeds the maximum amount which is not chargeable to income tax in any previous year, keep and maintain such books of account and other documents as may enable the assessing officer to compute his total income in accordance with the provisions of the Act. Now the point is, he has to keep the books of accounts in such a manner that assessing officer is able to compute the income, the taxable income. It is not necessarily saying that you should maintain bank book, you should maintain cash book, you should maintain general ledger, you should do balance sheet. All that is not mentioned in the section. They are only saying he must be able to draw a tax computation statement. 44ABE. Because it is interplay of 44AA, AD and AE, we'll just see specific provision of 44AB clause E also. And it says an assessee carrying on business shall, if the provisions of subsection 4 of section 44 AD are applicable in his case, and his income exceeds the maximum amount which is not chargeable to income tax in any previous year. So 44 AB is the section which tells us that the assessee has to compulsorily get the tax audit done. Correct? So here we are saying to a person where 44 AD subsection 4 is applicable, 44 AB clause E also will trigger, as a result of which he will end up maintaining books of accounts and getting the books audited under the provisions of the law. So we will just for clarity read 44 AD subsection 4 and subsection 5 again. I'll tell you these two interplays will have a lot of implications in terms of when the tax audit is applicable, when books of accounts is applicable. So I'm stressing on this and reading out again and again, because next we'll go to the example and we will test how the provisions would work. Where an eligible assessee declares profit for any previous year in accordance with the provisions of this section, and it declares profit for any of the 5 assessment years relevant to the previous year succeeding such previous year, not in accordance with provisions of subsection 1. He will not declare as per subsection 1 for 5 years. He shall not be eligible to claim benefit of provisions of this section for 5 more assessment years subsequent to the assessment year relevant to previous year in which profit has not been declared in accordance with provisions of subsection 1. So our example was quite clear. Assessment year 22-23, he chose he will not claim 44 AD. As a result of that, 23, 24, 25, 26, 27, he became ineligible to claim section 44 AD benefit as such. Now 44 AD 5. Notwithstanding anything contained in the foregoing provisions of this section. Now 44 AD came with an interesting provision now. This has become non-obstructive for the entire section as such, and it reads, an eligible assessee to whom provisions of subsection 4 are applicable and whose total income exceeds the maximum amount which is not chargeable to income tax shall be required to keep and maintain such books of account and other documents as required under subsection 2 of section 44A and get them audited and furnish a report of such audit as required under section 44A. So if you look at the overall section as such, it tends to give a meaning that a person who has just now started the business, assume his gross receipts is 80 lakhs. So what is 80 lakhs? It is less than 1 crore. So the provision of 1 crore and 2 crores I did not introduce in this. I'm just giving the example, assuming that the 44 AD subsection 1, we are aware, up to 1 crore, the tax audit limit is not there. Post 1 crore, tax audit limit starts. And then you have the new provision where you would check are the gross receipts from the business derived out of the banking operations or UPI operations, whatever, aggregately. And in case it exceeds 95% of gross receipts through banking channels, then your tax audit limit is not 1 crore, it becomes 10 crores. Correct? So this is the background. Now we'll come back to this and we'll tell, say in this example, it is 80 lakhs. So if it is 80 lakhs in the first year, assessee adopts 44AD and declares 8%. All of us are happy. It is 80 lakhs, 8%, 6,40,000. So no problem at all. Now the question is like this: assessee does not choose for section 44AD. What should we do? Now the provision does not tell in the first year if I don't choose what will happen. The provision only tells if you do not choose 44AD in the previous year, in the subsequent 5 years you cannot adopt 44AD. Then you will go into subsection 5. You are supposed to get the books audited and then declare the tax returns, tax computation, and file the returns. So this line has a tricky situation wherein in the first year an assessor is not declaring 44AD. He will declare 5%. Now this is the question. So do you think 8% is applicable or not applicable? So how is it applicable? Because the exception says in case you are not opting for it, then there should be a precedence for you to maintain books of accounts and audit. So the idea is, although he is covered under these provisions, he would not be required to maintain the books or get the accounts audited till the time he crosses 1 crore, or on his own option, he adopts section 44AD at least once in his lifetime. This is where the provision becomes tricky. Because unless he at least opts 44AD once, he is not an assessee who has been assessed to 44AD in earlier years. So to such an assessee, 40AD4 is not applicable. 44AD4, if it is not applicable, 44A5 is not applicable. If 5 is not applicable, assessee is not required to maintain his books of accounts and neither get the books audited. So that means to say, assume a person for his lifetime has income less than 1 crore. Can we say that he can show income less than 8%? Is it required? Because 44AD4 says that agreed, because 44A subsection 1 tells once your gross receipts is more than 25 lakhs, you are supposed to maintain books of accounts. But books of accounts I told you earlier only, and the provision just reads you should maintain the books of accounts in a way that the assessing officer is sufficient to do the tax computation, not more than that. So this is one interpretation I have. Few other CAs also have similar interpretation, so you can test this. So based on this, I'm concluding telling that in the first year, 44AD, if it is not applicable, in the subsequent years, you continue to do so till the time he achieves 1 crore. Because after 1 crore, the other provisions will get attracted. We'll go to the next example. We will see how the... So let us see the combined analysis of 44AA. On combined analysis of 44AA subsection 2 clause 4, AB clause E and AD subsection 4, we can interpret under section 44ABE, these assessees are required to get books of accounts audited, where the total income exceeds basic exemption limit. Earlier assessee has declared income under section 44AD in any of the previous year. Even being eligible, assessee do not declare income as per 44AD in any of the next 5 assessment years, in which he first declared income as per section 44AD. So in order to study this, we will look at the examples in this manner. We will see when business turnover is up to 1 crore, when business turnover is exceeding 1 crore but up to 2 crores, when business turnover exceeding 2 crores but up to 10 crores, when business turnover exceeds 10 crores. So point number 3 and point number 4 with respect to 44AD, there's not much to discuss because all of us know, and anyways it is more than 2 crores, 44AD is not applicable. It is only for the clarity of numbers, point number 3 and point number 4 has been shown, right? But of course, there are few important phrases we see here. It is called basic exemption limit. So what is the basic exemption limit? For individuals, we'll go with the normal 2,50,000, and we'll see when you compute the computation of income, whether the number has crossed 2,50,000 or not. And based on that, you would decide, even if you come to 44A subsection 5, 44A AD subsection 5, where you are supposed to maintain books and get the books audited under the exception scenario. In those scenarios as well, the basic exemption limit should be crossed by the assessor, correct? Otherwise, the tax audit would not apply. Now, the point is, to resident individual, basic exemption limit is there. But 44 AD also apply to partnership firm as such. So, to the partnership firm, what is the basic exemption limit? There is no basic exemption limit. There is no basic exemption limit. Now, the point is it zero? Now, as chartered accountants, we all read the law, we go to the parts in first schedule and try to understand what is the tax rate and see the basic slabs there and then tell, yes, this is the basic slab. So, because all of you told zero, we will go with zero, right? We will go with zero and tell that basic exemption limit is zero. And some firm which has not crossed zero, right, has not satisfied, is not more than basic exemption limit, is not the taxable income. So tax audit is not applicable. Although 4484, 4485, everything is applicable to, right? What if there is a loss of 1 lakh? Is it crossing basic exemption limit or is it not crossing basic exemption? So this is where the provisions are very tricky, because for these we do not have the ready answers as such. Most ideal way is the answer that you give. We will go with zero. We will not go with negative, because it is at least the basic sense to tell that, okay, at rupee 1 or paisa 1, right? As and when the firm earns, it is supposed to pay the taxes. So we will take zero as the basic exemption limit. So that is from the perspective of partnership firm as such. So these are few scenarios that I have added. These slides, I will share it on the portal. You will be able to download it. And we have around 12 scenarios here to check whether books have to be audited or not, whether the accounts have to be maintained or not. So this we can, at least few I would like to read now. So the turnover is up to 1 crore. Whether taxable income below exemption limit? Yes. In this example, we are assuming it is below exemption limit. Whether cash receipts or payments up to 5% of total receipts or payments is relevant, should it be tested? Need not be tested, because tax audit starts applying beyond 1 crore. Why would be tested now? We would not test it. Whether opted for 44AD in any of the preceding year? No, he did not opt. Rate of profit declared 8%. Whether required to maintain books under section 44AA subsection 2, there is a issue here. It says note 1 and it says, in case of individuals and HUF, if turnover is up to 25 lakhs and profits are up to 2.5 lakhs in previous year, and for firm turnover is up to 10 lakhs and profit up are 1.2 lakhs, maintenance of books is not mandatory up to that amount. Otherwise, books of accounts are to be maintained. So when we look at whether required to maintain books of accounts or not, we would read it along with note 1 as such. Whether required to get books of accounts audited, it is not required to be audited, because 8% rate of profit, the income has been declared as such. Next scenario, turnover is up to 1 crore. Whether taxable income below exemption limit? No. So it has crossed basic exemption limit. 5% rule, not relevant. Opted for 44AD in any previous year? Yes, he has opted. Rate of profit declared 4%. So now everything starts triggering. Requirement of section 44AA, maintenance of books of account. Yes. Books needs to be audited. Yes. Why should the books be audited? Because the income declared is lower than 8%. Simple scenario. Third case, up to 1 crore, taxable income below exemption limit? Yes. 5% rule not relevant. We are still less than 1 crore. Whether opted for 44AD in any earlier preceding year? No. Rate of profit declared 4%. Whether required to maintain of books of account? Note 1, because you look at the turnover and the profit achieved by the assessee, and based on that decide whether books are required or not. Whether required to get books of accounts audited? No. Why is that? Although 4%, because in any of the preceding years, the assessee has not opted for section 44AD benefit. So the next two would be quite predictable. So we will not go to that. We'll go to 1 to 2 crores now. 1 to 2 crores turnover, whether taxable income below exemption limit? No. Now, is the cash receipts of payments relevant? It is relevant now because we have crossed 1 crore. So here they are saying whether cash receipts of payments up to 5% of total receipts of payments? Yes. Opted for 44AD? No. Rate of profit declared is 5%. So now what is happening is 1 crore limit is crossed. As a result of that, he is required to maintain books of accounts. But proviso to section 44AB clause A will be used wherein it says the books of accounts need not be audited because 1, 2, 3, 4, 5. The column number 5, whether opted for 44AD in any of the preceding year tells no. This is determining whether the tax audit is necessary or not. Although books of accounts are required. Not making sense? Should I read again? 1 to 2 crores. Taxable income below exemption limit? Yes. Not opted. 5%? Yes. 44AB A. Proviso to 44AB A. So there are two things here. One is applicability of 44AB5. Another is exceeding the basic exemption limit as well. So basic exemption limit also is not crossed here. So the tax audit applicability would not arise. We'll go to the next situation. 1 to 2 crores. Taxable income below exemption limit. Correct. 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 So that comes under profit and profit from business or profession. But when you do the tax computation, you do all the entire computation and see whether the taxable income is crossing basic exemption limit or not. So we have to check if taxable income has exceeded the basic exemption limit or not. Correct. You will have other sources to be checked. So after all that, you are checking the basic exemption. So in the next scenario, we are saying 1 to 2 crores is the turnover. Taxable income below exemption limit? No. Cash receipts of payments up to 5% of total receipt of payments condition not satisfied. Opted for 44AD in any of the preceding years? Yes, he opted, but opted out from 44AD in any of the preceding 5 years. He has opted out. He has declared a profit of 10%. So in this scenario, whether required to maintain books of accounts, because he has opted out of the 44AD in earlier years, he has to maintain. Whether required to get books of accounts audited? Yes. Any issue? Make sense? Any doubts here? So I think you will need to closely observe the table and probably at home try to analyze. I completely understand. But this is how the presumptive taxation has been drafted. So we thought it is very easy for interpretation, easy for business. So presumptive taxation has been brought into books. But if you look at interplay of 44AD, AA and AB, we'll understand actually when to maintain books, when to discard the books, when to do the audit, and what should be the profit that we have to declare for business income in case these kind of turnovers are earned by the assessee as such. Okay, we'll go to a few more examples. We'll let this settle down. Does the assessing officer have the power to assess more than the returned income if the income declared by the assessee is greater than or equal to 8%. So you are the eligible assessee or your client is the eligible assessee. You have opted for 44AD and the provision tells you can opt for 8% as the profit from the eligible business, or you can choose to claim more income. What the law, section 44AD uses the words is the assessee chooses to claim more than 8%. So you can either declare 8% or you can declare more than 8%. So 44AD perfect you have followed. On presumptive basis, you have paid the taxes. Now the assessing officer would come back and he tells that you have declared 15% under 44AD. Because 8% is what Act tells, you can declare more also. So you have done 15%. Assessing officer says, no, according to me, I have determined separate income for you, it is 20%. Can he do that? So my answer in this case, it is based on a case law, so it is no. But in a later case law, I would come back and tell you why yes also is possible. Okay, at least in the developer's case, I would let you know what happened in this case law in Ahmedabad bench. The AO does not have power to assess anything more than the returned income if the returned income is greater than 8%. This is what is held. The section has been amended for the benefit of the assessee. The language of section of 4481 requires claims to have been made by an assessee for returning higher income. If there is no claim made by assessee in return for higher income, there is no higher income. The word claim signifies the right of assessee and it is not an obligation of the assessee. The distinction between right and obligation is very necessary here. Based on that, the court held that more than what is declared under 44AD, assessing officer cannot make any fresh additions to the return of income. Right? We'll hold this. We'll go to the next one. Can AO make separate additions over and above 8% income declared by assessee under section 44AD? The another case law in Jodhpur bench, it says, if the assessee has declared income at a rate greater than prescribed limit of 8%, no further addition can be made by AO. If say net profit rate of 8.15% applied by assessee, it took care of every addition. Separate addition made by authorities over and above said rate is required to be deleted. So these case laws are almost giving an impression that 8% I declared or more than 8% I declared. After that, there cannot be any additions to the taxable income as such. Okay. There would be interplay of few more sections. We would go there and then we'll understand this better. That will come a little bit later, but you can hold this for now. Can AO assess the income of the assessee under section 44AD even when the turnover exceeds 2 crores? And such books were subject to audit under section 44AB, but which could not be produced to the AO later due to destruction or mutilation. So this is the ground the assessing officer took to tell that the books of accounts are no more there. As a result of that, I do not believe whatever you are saying. As a result of that, I'll go back to 44AD and ensure at least based on 44AD, you pay the taxes. So the case law in Allied Engineers said, profit rate of 8% as per 44AD is to be applied where assessee does not maintain books of account and turnover is less than 2 crores. Therefore, provisions of 44AD were not applicable in this case at all. So it is quite possible during our assessments, somebody may turn out to be quite adventurous. The assessing officers, they can go and invoke 44AD. So we'll have a citation to tell that you cannot do it, although the books of accounts are no more there because all the declaration, IT returns, everything has already been filed as such. Whether current year losses and brought forward losses can be set off against deemed income. Section 44AD overrides section 28 to 43C, but does not override chapter 6. Therefore, current year losses and brought forward losses can be set off against deemed income. Makes sense? Very simple understanding. Because when it comes to the losses, brought forward losses and set off, we are dealing it under section 72. It is not in section 28 to 43C. So the deeming provision of 44AD is not covering those to tell that those losses are also deemed to have been allowed to you. It is not so. As a result of that, we will allow that loss. Fair enough. Now, when it comes to the losses, there are two kinds of losses. Either it is business loss, and one more important component as per the income tax law is the depreciation loss. So when it comes to brought forward losses, you can have brought forward business loss, you can have brought forward depreciation losses. Now, brought forward business loss, you're dealing with under section 72(2). We don't have any problem. But brought forward depreciation, unabsorbed depreciation losses is dealt with under section 32 subsection 2. This is between section 30 to 38, proper tax computation provisions under the law, which is clearly covered by 44 AD subsection 2, which tells under 30 to 38, whatever expenses or deductions are there, that is deemed to have been allowed. So 32(2) also is deemed to have been allowed. Look at this. It does not even belong to current year. It does not even belong to current year. It leads to a scenario wherein earlier year losses would not be allowed in case it is depreciation losses, even if it is between 30 to 38, just because it is in 30 to 38. Is that a right interpretation? Law is very clear. It is saying 30 to 38. But then if you look at the scheme of how do we set off the losses, there is a method that is followed. Normally, what do? The current year losses are first set off. 72(2) business losses are set off. And after that, we are allowed to set off depreciation, unabsorbed depreciation as such. So in this sequence, if we observe it, the law has chosen that although section 32(2) is placed between 30 to 38, it will come into operation only after giving effect to losses under 72 subsection 2. I'm not carrying the citation right now. When I upload the case law, I'll add it here. And the case law tells, in this sequence, when the operation of law has to take place, 32(2) unabsorbed depreciation losses should be allowed after computing the taxable income under section 44 AD as such. So unabsorbed depreciation losses can be set off for section 44 AD income. Citation I have not carried here. When I upload the PPT, I'll add it here. So this I am very clear. So this is how the interpretation is done. Now presumptive taxation is very easy. You have one turnover, apply 8% and the return is over. No, it does not work like that. So we will have to see certain interplay of the sections as such. Next one. Whether AO can make additions in the declared income of the assessee if assessee cannot explain discrepancies in the books. So here it is again 44 AD and we should see whether the AO can make additions in declared income of assessee if assessee cannot explain discrepancy in the books. There is a discrepancy in the books, the assessee cannot explain. So what will he do? As per the following case law, AO cannot make additions in the declared income of assessee on the grounds that assessee was not able to explain discrepancies. Books are discrepancy, but additions cannot be made. How is it possible? As per the below mentioned case law, assessee disclosed income under section 44 AE that he possessed only 8 trucks. AO made certain additions in the income of the assessee on the ground that the assessee has not been able to reply as to how he has been meeting his daily expenses. So it is a normal method of addition we have seen in assessing officer. They would tell that, okay, this is the business income you have shown. Show me your capital account. You are not shown in a drawing. So I'll assume 75,000 per month. So 3 lakhs is added. So he chose to add something like that. AO made the argument that even if section 44 AE of the Act is made applicable, it was for assessee to explain the excess income from. Assessee argued against this, and since the assessee had got 8 trucks, there was no question of making any addition at hands of the assessee from other sources because 44 AE tells you can choose presumptive taxes if the number of trucks is less than 10. You own, the assessee owns less than 10. The very purpose and idea of enactment of such provision like 44 AE of the Act is to provide hassle-free proceedings. The presumptive income which may be less or more is taxable. Such an assessee is not required to maintain any account books. This being so, even if its actual income in a given case is more than income calculated under subsection 2 of section 44 AE, such income cannot be taxed. This is the ruling that has come. Thus, it follows the query of assessing officer as to how the assessee met his daily expenses, there being no withdrawal and conclusion of additional income was uncalled for. So the facts of the judgment can also be applied to 44 AD and ADA as well. Similarly, AO cannot make any additions. So this is my view again. I'm just making a plain statement. Based on this, the additions cannot be made. I would come to certain scenarios where it can be made also. Just give me some time. We have some peculiar scenarios wherein we keep asking, being partners of the firms, whether partner is eligible for 44 AD on remuneration or interest received from the firm. Now the point is, when it comes to 44 AD, the tax is on gross receipts. Remuneration or interest from the firm is an income earned by the partner, and under section 28, he is supposed to declare such income as a business income. All of us agree that. But the point is it gross receipts? Is it gross receipts? Between partner and partnership firm, as per the Partnership Act, if you see, there is no difference, both are same because he carries unlimited liability. Even to the extent of holding any investments on behalf of the firm, the partner is doing. Makes sense. Even after all that, the gross receipts is earned by the firm can take 44 AD benefit. The partner would not be able to take it because in his hands it is not gross receipts, but it is appropriation of profits. So as an individual, you may say that to me that is gross receipt because I've got remuneration, I've got profit. But then you and the firm are not different, both are same. So the gross receipts earned by the firm is indirectly your gross receipts. Only thing is you are not getting tax because provisions of the income tax law has separate assessment provisions for the partnership firm as such. So the firm will get taxed as such. So in the hands of the partner, it will get taxed as business income, but it is not gross receipts. And because it is not gross receipts, straight away he is outside 44 AD. Eligible assessee, yes. Eligible business, no. Because that is not a business that is carried out. It is not eligible business, even if business is right. For example, say firm and partners business is same. We extend the analogy. Even then it is not applicable because it is not gross receipts. So that analogy is not possible. We have to go with taxing remuneration interest as is, but the provisions of section 30 to 38 is still applicable because to earn any income in section 28, if you have spent any expenses, those expenses can still be claimed as deduction because you did not claim the petrol charges from the firm. So you're claiming it now. Your internet charges you did not claim for the firm. You're claiming now. Your motor car depreciation is not belonging to the firm. The car is belonging to you. So you're claiming depreciation. So 28 you're getting taxed, but at 30 to 38 deductions allowed to the partner asset. So we don't have any argument on allowability of the deductions. We have argument on whether 44 AD is applicable in this case at all because it is not gross receipts. 44 AD would not be. Then we'll go to another interesting scenario. Can disallowances be made as per provisions of section 43B, overriding the provisions of section 44 AD as such? So what is section 44 AD is saying? It is saying when it comes to the coverage of the sections, it is 28 to 43C, and all the deductions are allowed under 30 to 38 as such. The deductions are allowed from 30 to 38. Those are the deduction sections. Now, when it comes to provisions from 40 onwards, these are more of disallowance sections. It is not giving you allowance. It is saying, I will restrict your allowance. So either on payment basis, I'll restrict. In case it is remuneration or interest, I'll put a slab or I'll put an interest rate. Based on that, I'll restrict your deduction. So these are called disabling provisions. 30 to 38 is called enabling provision. Okay, but this logic may be required elsewhere also. I'll come back to that. It says, can disallowances be made as per 43B? 43B also starts with a non-obstante clause, and it says, notwithstanding anything, any other contrary contained in any other provisions of this act. So 43B is non-obstante for the entire income tax law. But section 44 AD is non-obstante for what? For 28 to 43C alone. So prima facie 43B overrides the provision of 44 AD because it is overriding all the provisions of the income tax law. As a result of that, any of the disallowances listed in 43B, if the compliances are not done by the assessee, Although 44 AD income is declared by the assessee, 43B allowance still applies. PF not remitted, disallow. Bonus not paid within the disallow. Taxes which are not in nature of income tax but other rates and taxes not paid within the disallow. Interest to the state finance corporation, etc. Not paid within the due dates, not before filing due dates, disallow. So 43B is overriding the entire act as such, as a result of what? It is overriding 44 AD also, and hence disallowance of 43B remains. So we can see some of the illustrations here. Before this, I had one more aspect to cover. Assume that the assessee, being a partnership firm, has declared the income under section 44AD, 8% is declared. Being a firm, it has partners who are eligible for remuneration and they are also eligible for interest on capital. Correct? So interest on capital and remuneration, can you allow from 44AD profit? If yes, why? If no, why? One clue I have already given when we discussed 43B. So the idea there is, when it comes to enabling provisions, only those allow deductions. Others would not allow deductions. For example, you pay interest to the partner and you pay remuneration to the partner, right? No one is telling it is disallowed in your tax computation. As a mode of computation, what you do, you will also look at what is given in 40B, because interest you gave at 14%, but only 12 is allowed. 40B has limits of the 90%, 1,50,000, etc. So based on that, you will compute the remuneration and you are supposed to claim deduction. So what is debited to P&L? What do? We add back, compute afresh, and that remuneration in interest we claim as a deduction. This is the procedure. So as a result of which, in 44 AD cases, can we again compute remuneration and interest? Quite challenging, because section 30 to 38 are enabling provisions. Section 36(1)(3) allow deduction for interest. Section 37 allows deduction for remuneration. But 40 onwards, there is a disallowance, whether it is TDS or remuneration, 43B, etc. We have a disallowance as such. But the point is, when it comes to 30 to 38, right, the deduction is deemed to have been allowed, as a result of which you have not done any separate computation to arrive at the numbers. So there is no means to prepare one more computation for 40 clause B at all, because it is already taken care between 30 to 38. So 40B is not a deduction. 40B is a disallowance. It is on restrictive basis, it is giving disallowance. So it is called a disabling provision. So that is how the interpretation is done, and remuneration and interest is not given as a deduction for 44A. Of course, for 44AE, it may be a different scenario. We'll see. Illustration 1. Mr. Jai is an interior decorator. His gross receipts from profession for previous year 12-13 were 84. I think we'll make it as 19 to 20. Sorry, don't take 2012-13. We'll make it as 19 to 20, 84.48 lakhs. Why is that? Because from 12-13 to 19-20, the provision has undergone change several times. So I'm just playing safe and taking previous areas 19-20 were 84 lakhs. He wants to declare income as per provisions of 44AD. In this case, will he be liable to maintain books of account in respect of aforesaid profession? So what do we do in this case? Interior decorator is a profession as per 44A subsection 1. Agreed? Not agreed? Not agreed. So which are the professions listed for 44AA1? Legal, medical, engineer, I think interior decorator also is there. So it is covered under 44AA1. So if it is a profession categorized under 44AA subsection 1, it is covered under section 44 ADA. And section 44 ADA tells beyond 50 lakhs, if there is a gross receipts from your profession, then tax audit has to be conducted as such. So I don't see a doubt there. I would say the books of accounts has to be maintained, tax audit has to be. Correct, sir. No, this is a good interpretation. He is saying he is not a professional. And so he is saying you cover it under business. As a result, go with 8% and finish off the tax returns. Yeah, now that is interesting. Now you have to tell me what should we do. Sir has given us amazing question now. He is saying interior decorator. In this case, you have not told whether it is engineer or not. You have told interior decorator. He is assuming he is a carpenter. So he is telling go with 4480 and claim it. For the designing, but we are telling interior decorator, I think on an overall basis he is doing everything. Okay, to this I'll add one more complication. Then we will see. Okay, I also don't know. I'm not given any answers to all this. I'm not given any answers to all this. Let us discuss. Sir said interior decorator, carpenter, as a result of which he is not a professional. Now, what do we mean by a professional? So for that, we normally look at what is the definition of profession. And as per the Income Tax Act, we go in section 2 bracket 36 and we try to understand what is profession. And profession tells profession includes vocation. So it is quite possible that you are in a vocation, skilled, trained in that kind of job, but you do not possess a certificate from a recognized institution. So based on that, can you use this analogy under section 194G and do 10% TDS to him? TDS cannot decide whether he is a carpenter or a qualified employee. Correct. 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 So as per 194J, he is professional or not a professional? Relevant to me. Carpenter, not relevant to me whether he's making 2% or 10%. It is the business. So I have to clean the one who is making the payment. Perfect. So sir said 194J not relevant in our case. So we leave that. So we leave that because that is TDS provision. This is taxing provision. That is not relevant. 100% take. Contractor, business. Okay. Now, this interior decorator, who is a carpenter, that is the extended meaning we have got for this example. So in this case, is he covered under 44A subsection or no? Because all this finally boils down to whether 44A1 includes this guy or no, and based on that we'll see whether ADA is applicable. Correct? So under 44A subsection 1, now what do we do? Should we classify him under profession, or should we claim, or should we tell 44A1 is not applicable to him? Sir, in the analogy that you gave, we will assume that 44A1 does not apply to him. Because You told the certificate is important. So we'll hold on to that analogy. So if that is the case, 44AA1 is not applicable. So in that case, he becomes a business. If it is treated as business, 1 crore is not crossed. It is option of the assessee. He will go and declare at 8% and he'll close the. But only thing is, this will not go unchallenged because when it comes to the definition of profession, it still includes vocation. Sans 194J, we will leave it. We will not even go to 194J. Even for a basic terminology of profession definition to be seen, if the profession had to be defined only to tell that, okay, only a certified person would be treated as a professional, then profession would not have been defined to tell that profession includes vocation. So assessing officers still have a very good case in this case to tell that it is a profession and not a business. Possibilities. Your analogy is taken, sir. Your analogy is taken. There is nobody called failed chartered accountant because for you to be called a chartered accountant, certificate is required. Same problem is not there in interior decorator. That is the issue.
He refuses to get the account audited. Willing to pay the penalty.
He is willing to pay the penalty. Everybody is happy. Everybody is happy because what is it that we are trying to tell here? But only thing is, the law has to be interpreted the way the tax computation has to be done the way the law tells. But the point is, if 44AA1 is attracted, I feel ADA applies. Contrary view, anybody can. No, TDS we are not going, sir, because he is very categorical. He told 194J we will not go. So, sir, only thing is our friend is saying to determine this, go to 194J. That is what he is saying. I'm not saying. He is saying 194J you go. In that you look at the payer, is he doing TDS at 1%, 2%, 1% or? How? See, that may be one method to send the notice. That does not give you an interpretation of what is profession under 44AA1. I don't think you can indirectly come and tell what is profession there. That is not possible. Gross receipts. Gross includes material and services both. But why, sir? That is his profession. He is the engineer. As an engineer, he has taken a turnkey project and he has done the work. He is still a professional. So I'm saying there are multiple ways of seeing this. And in fact, he now 84 lakhs, you want to split between 40 and 44. No, I'll tell you, I'll come to that because then you are telling to the extent it belongs to 40 for profession, it is not crossing 50. So I'll go with ADA. And to the extent it belongs to 44 lakhs belongs to material, that portion is business, I'll adopt 8%. So as I told you, I'm not giving answers to this because it is purely fact-based. I cannot, because it is going round and round based on the several assumptions that we make. And this is how we have to implement 44 ADA and ADA I'm trying to drive it. That's it. Sir, degree of skill is there to carpenter also. That is what he's saying. Sir, you are telling certification also, degree of skill, and you are telling or. It cannot. According to you, it is profession. It has to be profession. So on these facts and circumstances, we have to go. It is not that easy. Leave alone. Okay, interior decorator. We'll just change the name to authorized representative. It is not interior decorator. We'll tell it is authorized representative. What do we do? So who is an authorized representative? Is somebody who is said to be authorized representative by the CBDT under section 44A subsection 2 in the notification they have released. They have told these are deemed to be other professions. So he's coming under 44A subsection 2. So what do we do? 44A subsection 1 is spoken by 44AD also while defining eligible businesses. 44A subsection 1 is also told by 44ADA. 44A subsection 2, either of the sections are not same. So what do we do? So if we closely observe 44AD subsection, the ineligible businesses that it says, it particularly tells, of course, the 44A subsection 1, if it is there, 44AD does not apply. But the 44AD applicability, the subsection says, it uses the word business or profession. So in 44AD subsection 6, in the exclusions, AD subsection 6, I don't think I'm carrying here. Let me see if I can read out from here. Okay. 44 AD subsection 6 reads as such: the provisions of this section, notwithstanding anything contained in the foregoing provisions, shall not apply to 1. A person carrying on profession as referred to in subsection 1 of section 44 AA. A person earning income in nature of commission or brokerage, agency business. See, it comes in 44 AD subsection 1 itself. The initial thing we know, non-obstante, section 28 to 43C, all that is given. In case of an eligible assessee engaged in an eligible business, a sum equal to 8% of total turnover or gross receipts of assessee in the previous year on account of such business, or as the case may be, a sum higher than aforesaid sum claimed to have been earned by the eligible assessee, shall be deemed to be profits and gains of such business chargeable to tax under the heads profits and gains of business or profession. That is 1. Next.
What are the last line of this illustration? Last line of this. This case will be liable to input account.
Yeah.
Only the maintenance of the account. I am getting it audited Article 8. Now, what maintain the books of account? No question about it.
But is maintenance of books of account not required for 84 lakhs gross receipts?
I don't have, though I am liable to get it account audited. There are no books of account, there is a question of getting audited.
So you will only pay penalty for an audit being not conducted. Correct, but the question is not that. We are only telling will he be liable to maintain books or no?
Not maintain, pay the penalty for not maintain the books of account.
So I mean that way we can keep paying penalties. There is no doubt about it. A best judgment, how will he do it? So you mean to say if 8% or 50%, whatever is there, it is not declared, he is going with section 144.
I have to make a
Sir, sir is saying 4480 is there. So why should I go with 144? 4480 tells whatever is there as books, you need not maintain books. I'll give you 8%. That is what he is saying, 4480. Then why are you going with 144? For which he is paying penalty and he is declaring 8%. He is declaring 8%, sir. No. I mean, we are in individual HUF and firm only. We are not in the company still. Non-disclosure. He is disclosing. There's no non-disclosure in this case. No. The problem is only with quantum of tax computation. It is not on disclosure. He is disclosing. Entire thing is being disclosed.
84 lakhs is the receipt.
Correct.
He can take the entire amount as income and say that.
No.
He can take penalty for non-disclosure.
He cannot say it is not disclosed. It is disclosed. Now, once gross receipts is given, assessing officer's duty is to only now determine the income. His not duty is, he cannot tell you are not disclosed. It is disclosed here. So that may not hold out. So allowed under Indian Medical Association and all that problem I don't know. I think that is in the course of profession itself. That is not a business. No. You are telling in the course of running the clinic he is giving. I am saying it is in the course of profession. Why should you treat it as business? I am saying. No, that is. See, you can have a profession, you can have a business income, but probably you can have professional income, you can have business income, right? So for the profession income, you can see whether 50 lakhs is crossed or not. For business income, you can see 1 crore is crossed or not. Based on that, independently, you can apply 4480 and ADA, that is allowed. There's no doubt there. Why? Sir. No, sir. You are going with his medical profession definition. I am giving generally, if a person is carrying profession, not connected to that, he has another business. No, connected to that, how is it business? I am saying because it is in relation to profession, he is giving that. It is not business. It is not business. No, issuing bills. No, issuing bills is one more matter.
Sale of medicine for which I paid 20 lakhs. So for 25 lakhs for ADA, 20 lakhs sale of medicine. Can I come under for ADA?
Is it for medical profession? Yeah. I doubt you can do it because you are doing it in the course of the profession itself. I don't say a difference between profession and business in your example. I am saying. You understood what I am saying? There's no difference of profession and business in the example you gave because in the course of the profession he is selling this. That is the point. But he had another business where there was a trading business altogether. Yeah. So that is where we have some anomaly when it comes to income tax return as such. I'll tell you where the problem that he is facing. When you try to fill the income tax returns, it asks you what is the nature of the gross receipts that you have got. So what you have done, 20 lakhs you have chosen under medical profession, correct? Another 25 lakhs you have chosen under trading, retail trading. Now my point is, what he has done, is it retail trading? Income tax returns will take it. But in principle, do you think any assessing officer would agree, is he doing retail trading? Exactly, that is the point. So, I mean, my honest opinion, I feel it is profession because it is in the course. Assume that he had a different, trading business itself. So he is proprietor of that business also. And he has got income from there. So profession, you use ADA, business, you use AD, no problem. Within 50 lakhs and 1 crore, you still apply. Where there is a composite thing like this, and in relation to business, you are selling something, I doubt it can go to AD as such. No, he'll take 45 and he'll go with ADA and he'll declare 50%. 45 lakhs would go under ADA. Correct. Correct. So I think we are spending a lot of time on this illustration. So several other illustrations are there, but I only wanted, we need to discuss so that we would know in which way we have to approach the topic as such. Not that my objective of entire 41 slides I would cover, that will not be possible. But if I have something, a new aspect to tell or some different way to tell few things, we will cover only this. Okay, we will take this. It says Mr. X has opted for 44 AD and earned the following incomes from eligible businesses. Business 1, his turnover is 1 crore, profit earned is 20 lakhs, income declared for tax is 20%. Business 2, 80 lakhs turnover, 2 lakhs profit earned, 2.5%. Total receipts is 1.8 crores, profit earned is 22 lakhs, income declared for tax is 12.22%. Assessee wants to declare income of 20% for business 1 and 8%. So the lesser profit for business 2. And opt for tax audit under section 44AB for income of business 2 as the income declared is less than 8% of the turnover. Can the assessee take this stand and is it valid? So he has two businesses. One business is 1 crore is the turnover, another business 80 lakhs is the turnover. Tax audit cannot be conducted business wise. It is assessee wise if you tell you do not do tax audit of capital gains. May not be. It is applicable business wise. Now the point is, eligible assessee. Gross receipts. So gross receipts is 1.8 crores. 8% declared, 12.22%. So according to me, at this, it is over. And I am saying, going on to saying tax audit also is not required because more than 8% is already declared. No, I'm saying what is the use? Read the question in this context. What is the use? Either way, 12.22%, I'm saying it's okay. Because on an overall basis, he is crossing 8%. It need not be seen business wise. You have to see all businesses put together is 8% crossed. So this is one more aspect I just wanted to bring it to your notice. These are the codes that we would see in the income tax returns. And when we try to fill up the respective incomes, okay, in this manner, these codes allow you to file the tax returns. Now the point is, you may be thinking it is not 44 ADA, not possible. But he's telling possible because in the schema, he has given it as profession. So there are a few things we may have to note down that also. For example, it says general hospitals 18001 ADA. It is taking under ADA when we fill the return. Specialty and super specialty hospitals, it is taking under ADA. Again, we are looking at the individuals, firms here, not the corporates. Nursing homes 18003 ADA. Diagnostic center, pathological labs. Now, independent blood banks, it is not allowing under ADA. If you try to fill the return, the schema does not allow you to do it under ADA, but it allows you to do under AD. Medical transcription, AD. Independent ambulance services, AD. Medical supplies, agencies and stores, AD. Medical clinics, it is taking to AD. The clinic, the example that you give. So I'm saying when you are doing the analysis for 44 AD, whatever decision you are giving to the clients, I think you can try to fill the returns and see indirectly the schema also is allowing you the kind of interpretation that you want it to be. Quite possible that, sir, in your case, interior decorator, I mean, I have not gone here. Exactly. Straight away it came, sir. Now schema is allowing 44 ADA. Correct. So I'm saying this aspect also has to be kept in mind while filing the tax returns. It is not that easy. So this also I've given it for your reference. You can please go through them. So this is the latest judgment that has come on 44 ADA for partner of a firm receiving remuneration. Is the tax audit applicable? So Bombay High Court in latest judgment of 9th March 22, Perizad Zorabia Nirani, assessee was an actor by profession and also a partner in 2 partnership firms. Filed return of income of same was treated as invalid by AO as audit was not conducted. Assessee contended that remuneration and interest from firm should not be included in gross receipts under section 44 AB. High Court held that the taxpayer was not carrying on business and the remuneration and interest received by taxpayer from partnership firm could not be termed as its turnover. Therefore, could not be treated as gross receipt of the taxpayer. Considering the above case law, it can be construed that remuneration and interest should not be considered in gross receipts under section 44 ADA as well. That is the reason under section 44 ADA, we don't take gross receipts because it is, we don't take remuneration and interest. This has further analogy because in this case, 44 AB audit is not considered as applicable because interest and remuneration is not considered as gross receipts at all. Maintenance of books of accounts and all. Reduction.
The 44 ADA on one hand they are telling 8% they come to balance sheet in the same figure. So you're asking capital, asking fixed asset, asking subject debtor, asking subject creditor. Not proper books of accounts are getting all these accurate.
So
I have to calculate depreciation.
Calculate.
Compare the opening balance of the
Correct.
capital.
Correct.
Have to compare the closing balance of the capital. Subject debtor has to be given. Subject creditors have to be given. What is the meaning in that?
So now what the law is telling is 44 ADA is a presumption section.
Only for income, not for
Correct. But for maintenance of accounts, once it crosses the threshold, we are supposed to maintain books of accounts.
in the permitted the 44 ADA. In it calls for maintenance of books of accounts to give all the yeah,
Correct. So is that maintenance of books of accounts? I'm not sure. See to what extent the maintenance of books of accounts has to be maintained. We have to see. So for ADA, in the IT returns, what are the blocks it will ask? I'm not able to recall it, so I'm just asking. Sir, cash on hand, then. Debtors and creditors. And Huh? Cash in bank. Sir, now in this, you need not, sir, you need not fill the balance sheet. You need not fill the balance sheet. You need not fill the balance sheet. It is not, sir. For example, I raise an invoice on you. If you pay, I'll write you are paid. If you are not paid, I'll show as balance. That is my debtors. Why should I maintain any other books of accounts for this?
Balance sheet format is asking sundry debtor, asking sundry creditor, asking capital.
I don't think you need to fill that. If you opt for, I don't think so. You have to talk louder. I can't hear.
Cannot give emergency.
Correct, sir. So,
But if you cannot give, you can leave it blank. You can only the blank disclosure. Why should not disclosure?
go ahead. You're saying something. We cannot file a tax return based on that. See, now the point is your gross receipts is 45 lakhs in profession. As per 44 AA, you are supposed to maintain books or no?
Specific section comes, the books of accounts not maintained, it is asking data, cash, bank and delta. That's it. To fill that, your responsibility.
That is what I feel, sir. I'm not sure why balance sheet is required. Sir, debtors and creditors, if you don't maintain, how will you do your business or profession at all, sir? So that need not be books of accounts. Sir.
That means at all balance regular maintenance or books of account. That is my argument.
So it is not because there are several other things. For example, you may not be maintaining a fixed asset register. That is also books of accounts. Okay, I will not. Okay, loan schedule is not there. Loan schedule is not. I feel those 4 line items, what they have asked is what is mandatory to be disclosed. I don't think balance sheet is mandatory. That is what I feel for 44 AD. Sir, why are you filling balance sheet? I'm saying, sir.
It demands filling.
It does not, sir. It does not demand, sir. It does not. It does not show the errors. Probably you have to find out the reason for the error, but at 100% this is not there. 100% this is not there. Because those 4 items, what they said, debtors, creditors, that cash, bank balance, only those are mandatory. Rest of it is not mandatory. No, sir, capital is not.
Capital. Some of the capital additions have been made. Additions have been made in my friend's case. Where it was 100 rupees capital this year.
Sir, I'm saying that is to do with a line item. That is to do with a line item that is taken from the balance sheet that is filled. I am saying in this case, balance sheet filling is not necessary. That is all I'm saying. In the IT returns, it is not mandated to fill the balance sheet for this. So when we look at 44 AD, we tend to believe, okay, with that, the rest of the income is not taxable. That is a tricky proposition because assume that you have sold an asset. What happens? 44 ADA overrides only section 28 to 43C. But when it comes to capital gains, you have to adopt section 50 and compute what is the sale consideration, the WDV. No other asset is there in the block. As a result of that, the capital gains has to be computed. So 44 ADA does not override the capital gain section as such. So this we have to keep in mind. Proviso to section 44 AE subsection 3 says, the said proviso provides allowance of salary and interest paid from income under section 44 AE, but the same proviso is not available in 44 AD and ADA. So we discussed in AD and ADA it is not available, but in 44 AE subsection 3 a specific proviso is inserted to tell that you can claim salary and interest of the partners. That is the reason it is allowed for 44 AE cases, 44 AE when you are applying for the partnership firm. One more thing, if you may have to see, 44 AD you are applying in this case, and assume you are in, say, dealing in the properties as such. So in that case, you are constructing and selling the property. But when you are selling the property, the sale consideration is less than the stamp duty valuation. And the nature of income we are talking about here is not capital gains, it is in the nature of business income. So in this case, if the stamp duty valuation is more than the sale consideration, what will you do for the purpose of 44 AD? Because when it comes to the provisions as such, we are very clear. When business income has to be computed, you go with 43 CA, adopt stamp duty valuation. Based on that, you compute your P&L. Here P&L is not there. As a result of that, the 43 CA in these cases will become the gross receipts. Because 44 AD is overriding what? 28 to 43 C. 43 CA it is not overriding. So as a result of that, the stamp duty valuation you have to consider, adopt gross receipt. That value itself as the gross receipts, you apply 8%, that is fine. But that does not give an analogy telling that, okay, 80 lakhs is stamp duty value, your gross receipt shown in the return is a 60, 20 is unexplained. No, it is not unexplained, because as long as the nature of business is shown and 43 CA principle is followed and you adopt 43 CA stamp duty as gross receipt, it is sufficient to pay 8% on the differential 20 lakhs as well. $44 area, I mean, in case it is a straight computation, I am skipping those because you'll only take number of tons multiplied by 1,000 rupees into 12. I'm not going into those aspects. Number of vehicles. So on a broad level, one more understanding is necessary on certain aspects, how we should compare AD, ADA and 44 AD. This also can be seen. Type of assessee, 44 AD applies to individual HUF firm other than LLP, all residents. 44 AD applies to resident assessee. It does not give this one. 44 AE, no restriction. It does not tell anybody. 44 AE can be, it just says any person. When percent or sum not offered, section 44 AB applies. So in 44 AD, it applies only when income exceeds basic exemption limit, and as we discussed, subsection 4 applies. That is, in previous years you adopted and you left one of the years to claim 44 AD. Following years you come under subsection 4, subsection 5, and tax audit becomes applicable. In 44 ADA, when basic exemption limit exceeds, the income is more than basic exemption. 44 AE, whether or not income exceeds basic exemption limit, it does not matter. 44 AB applies in case the income crosses the limits as such. In case of firm, allowability of partner's salary and interest, 44 AD it is deemed to be allowed. ADA also it is deemed to be allowed. In AE, from the presumptive income, claim can be made because there is a specific proviso provided in the section itself. So, I mean, in case if there are any other scenarios we can discuss. One more point I had was, assume in case of section 68 and 69 issues, what happens to 44 AD? There is undisclosed income. So in case there is undisclosed income, how does 44 AD operate? Or if I have to rephrase my question in different way, gross receipts is say 80 lakhs. You declared 8%, 6,40,000. Okay. Now, assessee is doing the business for the first time. He has adopted 44 AD. He has paid 8%. Assume 6,40,000. Next year, a notice comes because he has a land registered in his name for 10 lakhs. But if you see his capital account, of course, books are not there, but if you see his income, you can make out he has only 6,40,000. Assume that there is nothing else to, there is no other sources. So assessing officer tells, no, you have declared your gross receipts as a basis of which 80 lakhs is your gross receipts. You declared 6 lakh 40 as your income. 10 lakhs you have purchased the property. 10 minus 6.4. So that is 3.6. I will consider it as income from undisclosed sources. Tax you under section 68. Adopt the tax rate for 115 BBA and tax that differential of 3.6 lakhs under 60% tax rate. He's claiming that. So how will you, the point is now it will boils down to how will you prove that 3.6 lakhs also is earned in the same sources. So one analogy is an extreme case to tell that beyond 8% I'll not declare, because presumption is given as a choice in the hands of the assessee. So I will not declare it as income. You go and add it, I'll go and fight. Point number one. Point number two, he may say that it is not undisclosed because this 3.6 also came from 80. So the point is, as long as it has come from 80, it is not undisclosed. You treat it as normal business income subject to me at normal slab rates or the 30%, whatever applies. But don't go to section 68 and invoke 115 BB. So in these analogies, the cases may go, as a result of which we may have to see how to best present the case to tell, okay, beyond 80 lakhs, there is no other income to the assessee.
Prove it by way of cash flow statement.
He has to prove by way of cash flow statement. Again, sir will tell, you told books of accounts is not required, but cash flow statement, how did you prepare? So finally, it is coming back to that. This is the reason, sir, this is the reason I told I'll go with section 1, the option 1, and tell that presumption is assumed, beyond 8% I'll not declare, you do whatever. Now it is up to him to tell that from where did I get the 3.6 lakhs? He can also just claim. Let him prove it. So why it is required if it is less than 50, I didn't understand. If it is less than 50 lakhs, you go with ADA. Tax audit not required. I've declared 50%. Huh? So the presumption is in profession, the profit margin is high. That is why it is made 50%. So you tell me whether presumptive taxation is required or not. I don't have an answer to that, but I'm saying it is possible. It is possible. So the only way you can defend is with the kind of documentation you have maintained. 80 lakhs you have earned. You have so much of invoices you have raised or whatever bills you have. You have the receipts to show that out of 80 how much you have collected. So overall, you have the proof telling that this is how I have earned it. And now it is up to you to tell whether it is profession or business. We'll go and fight and find out. So tax audit, I'm saying in case we don't have a case to fight, you don't have an option but to do the tax audit. You can disclose. No, you need, see, it does not mean that if you have not audited, the profit is not true. Yeah, but only problem is ADA does not allow it to be less than 50, as a result of which the tax audit becomes mandatory. Yes, sir. Less than 1 crore. Less than 8% is not allowed, no, sir. That we have to see, no, sir. That condition we have to see. He has not adopted 44 AD. the 4480 subsection 4 is not disallowing him from going out of 4480. He'll declare less. Correct. Or for some reason tomorrow, for some reason he may come to 4480. Who knows? Correct. Correct. But once you opt, finished. Which one, sir? So, and is it it is purely based on what records we can prove, telling that this 3.6 is out of 80 and I don't have any other income. So it is something like I tell that out of all this business receipts, I'm left with 10 lakhs. That 10 lakhs is what I have paid. Assume there is a bank account. In a simple case, I'm not making it complex. In a simple case, you have the bank account, you have receipt, you have payment, you have balance. That balance I've used to pay. Now you don't have any doubt telling that that is the source from where you made the payment for the property. So in that case, he can't do anything. The problem comes when you tell out of the 80 lakhs, say 5 lakhs is cash. Now you spend 5 or you did not spend 5. We don't know. If you spend 5, you are not able to prove that it is out of same resource, same receipts. He may tell that you are not able to prove the source of the receipt. Then he'll go to 68. That is why sir said it is purely based on the records that you keep to show this. The 3.6 also is part of it. That is the only way. In case it has become compulsory audit, is an option given to you to get audit or not? No, it is mandatory audit. So you did not opt out of 4480. The stand remains telling that you are not opted out of 4480. That remains. You can come back to this. Correct. AE, there is no turnover limit. Unfortunately, it goes with 44 AE provision, and I will still go with, you said 8 vehicles, but 12 crores would not be there when it comes to 44 AE. 1000 into 12, 1000 into, so it is. No, 44 AE, he is telling he has 8 vehicles only, but the earnings is 12 crores. Gross receipt is more than 2 crores. But yeah, I mean, this one, see, practically whether it is possible or not is secondary question, but first question is it out of the plying, hiring and leasing of the vehicles? Yes. So if it is yes, 44 AE still allows that I can go with the presumptive taxation. Wait. Now, out of 12 crores, you should also prove that you have spent so much. So maintenance of books are not necessary, but yet you have to prove, because the differential of the income, which has resulted into some asset, on a later date when assessing officer asks, you will not have, unfortunately, any explanation to give. So I am telling yes, but provided you have spent so much of money and you don't have excess cash or excess assets. Once you have it, we enter into litigation. It becomes very difficult to prove this, I'm saying. Have you spent it? If you have spent it, I don't have a problem. Preparing is he needs documentation of expense also. How will he prove that he has spent? Correct. It's an option. It's an option. Now the option becomes litigation if you start earning more profits and start accumulating the assets, and the principal here is not. It may amount to concealment of income.
Automatically wrong skill set.
Correct.
Wrong. Third one. CA. 60 lakh. 50 lakh. 2% income. How is it?
Once it is 60, tax audit applies. So you are saying you will not go with tax audit. It's a mandatory tax audit. So I'm saying 60, you don't have an option. So thanks for your patience hearing. I'm concluding the session. And I'm sure more than creating clarity, I've created enough confusions. So it is in fact required because it is not that easy. 44AD is not something that you take gross receipts and apply a percentage and close it. There are interplay of several sections. We have discussed all of them together. The clarity is there in the PPT, I suppose, that will be shared in the portal as such. I hope we will do much more research in it and come out with many more interesting case laws as such. Thanks all of you.
Thank you, sir. Should we take some online questions? Or should we? Yeah. We'll skip those which we have already answered. Okay.
Can I assess C? Earning income from letting out of property can say income is from business income and opt section 44AD. He has around 4 tenants and gross receipt is rupees 1.25 crores. Mr. Sharat Chandra CA has asked this question. So the point we have to first find out is income from letting out of property. Is it classifiable under income from house property or the business income? Of course, that is the first question. You will have several factors that has to be considered for this because the business as such would be in the nature of adventure or of trade or business. As a result of that, there would be certain activities which would be done by a businessman much more than a simpliciter landlord who just gives his property on rent to the tenant. So there are certain case laws which have covered this aspect also, something like Supreme Court judgment in Chennai properties case, which clearly brings out, what are the distinction on when a income can be let out property or income from house property or when the rent can be business income. So in case you feel that the landlord is not just collecting rent only for giving the building, he is giving other facilities as well. For example, it is a commercial property. He has given some reception services. He has given security services. He is providing, there are certain rules to tell that, okay, this is the hour within which you can operate the business. This is when the goods can come. This is when the goods can go out. All this together partakes the character of business. Only then it will become business. Now the point is, once it becomes business, can you take 44AD is the question. Then we go with provisions of section 44AD if these conditions are satisfied. So it does not matter whether he has 4 tenants or not. What matters is the gross receipt of 1.25 crore in this case. It is still less than 2 crores. He can opt for 44AD. And in case you can prove that the landlord is doing much more than the normal collecting of the rent, he is doing as a real business. In those cases, you can adopt 8% on 1.25 crore as well. So it purely depends on the answer whether it is income from house property or business income in this case.
Covered similar cases.
In few cases, a few questions are already answered. So,
yeah, so we need not take that. Thank you, sir. We have come to an end of excellent session. Of course, one round of applause for the speaker. I request the treasurer, Mr. Manjunath Allur, to come on the dais and hand over a memento to our speaker as a token of gratitude and respect. Thank you, members. Thank you for turning out in large numbers. Definitely, we seek a continuous cooperation in this regard. Thank you, everyone. Good night.
Sir, we'll give you